Hello and welcome to our next NAP. NAP stands for Nonprofit Auditors Point, and I'm your nonprofit auditor. My name is Irina Oshkova, and I have my practice in downtown Oakland, where me and my team, we serve nonprofit organizations. We provide assurance, audit, and review services and tax filing. I created this YouTube channel where I record weekly NAPs to help nonprofit community and specifically executive director, finance personnel, board members, and everyone else who involved in reading financial statements, analysis, reviewing, to understand better some accounting and auditing matters. Thank you for joining me today for our next NAP. And today we're going to talk about difference between financial audit and financial review. I get this question very often. Irina, can we perform financial audit or should we perform financial review? What pros and cons, and what would you advise? And as always, the answer is really depends. It depends what organization needs and which type of assurance, audit or review will satisfy external requirements, donors, and the organization. Okay, let's start. Audit or review. So both audit and review are assurance, but they provide different type of assurance. Audit provide reasonable assurance that financial statements are free from material mistakes. Reasonable because it's not absolute assurance. We as auditors cannot absolutely guarantee that there is no misstatements, but we perform sufficient amount of procedures, provide reasonable assurance based on the reasonable standards that financial statements are free of material mistakes. Review provides limited assurance. And limited assurance, it's through inquiry and analytical procedures, but auditors do not do depth review of each individual transactions. Review primarily consists only analytical procedures in inquiry. That's all. I want to show you the report, how review report is different from audit report. So right here, you can see the report for the review. And you can see that on the review report, we are referring to us as the auditors. We're actually not independent auditors. We're independent accountants. In review, we're not auditors. We're independent accountants. And we do provide opinion that in our accountant's conclusion, based on our review, we are not aware of any material modification that should be made to the accompanying financial statements. That's our opinion that we, as independent accountants, when we're doing financial review, are expressing. You can also see in this paragraph in accountant's responsibility that we use standard we perform review in accordance with Statement of Standards for Accounting and Review Services. That's the standard is used, and we issue limited assurance. Now let's take a look at the audit. Audit report, we're referring to us as the auditors, and our opinion is stated right here on the top. We issue an opinion that financial statements not materially misstated, and we provide reasonable assurance. And as you can see, we even referring right there in the audit report that we perform audit in accordance with generally accepted auditing standards, GAS, and we identified and assess risk of material misstatements, obtain understanding of internal controls, evaluate appropriateness of accounting policies, and we conclude whether conditions and events raise any concern about the future of their organization. So you can see that audit report, first of all, we refer as auditors. We use different standards than review, and we specifically stating in the audit report what deep procedures we performed, and we took into consideration of the organization system of internal control. None of that we as auditors do when we perform financial review. Now, financial statements, balance sheet, income statement, statement functional expenses and cash flows, and footnotes will look exactly the same whether we perform review or audit. So, but the paragraph itself and our responsibility as auditors or financial or accountants when we perform review are different, very much different. Because review is require less time, require less substantive testing, confirmations. Review typically is cheaper than audit. It's about 70% cost of the audit. In an audit, we examine internal control. We test individual transactions. In review, we simply inquire and look at any deviations, from last years, between quarters, something that we can plausibly explain and inquire. Audit also very often is required by state, by government agencies. So if the audit is required, then review will not satisfy the auditor requirement. For example, in California, under California Integrity Act of 2004, nonprofit that generates more than $2 million in revenue have to perform financial audit, not the review. Also, if nonprofit accidentally performed the review, it cannot be easily converted to audit, and vice versa. They are completely two different type of engagements. Also, some donors with the application for the grant do require to submit some sort of assurance. Some application will say either audit or review, or some applications will specifically say an audit. If you ever in doubt, I would say go with the audit, because audit will satisfy review requirements as well. But that will protect nonprofit to perform audit if the funder or external requirements will arise that require the audit and the organization had the review instead. A lot of government agencies, depending on the amount of grants, require various type of review or audit. If your nonprofit does not have any external requirement for review of audit, and you as a new nonprofit considering where should you start, I would say maybe start with the review because it's a less invasive, require less time, less costly, and maybe eventually move to the audit. To summarize, for nonprofits, it's very important to understand that review and audit are two different types of assurance that cannot be easily converted from one type of assurance to another. Even though statements themselves look identical, balance sheet, income statement, cash flow, and statement financial position, and statement functional expenses, they all look the same, but the report where we issue an opinion is different. In audit, we issue reasonable assurance. In audit, in review, we provide limited assurance. We perform very little procedures and provide limited assurance. So if you are a nonprofit considering which engagement is better to perform, audit or review, do contact your auditor and see what type of assurance will work for your organization. Thank you so much. Hopefully that was useful, and I'm looking forward to see you next time. Irina Ryzhkova, your nonprofit auditor. Till next time.